Good morning. Thanks for tuning into the trade setup. I'm Neeraj Shah, and it's a volatile week. That's the best way in which I can put it. We'll have a start which is very shaky. Let's see what happens ahead. I'll summarize all of that. First, the key events this week. There are five Fed members speaking, including James Bullard, who's known to make fairly headline worthy comments. So that is something that will keep the minds of all global investors up there. Fed meeting minutes are coming out on Wednesday. The US September CPI report comes out on Thursday, and US retail sales data and consumer sentiment comes out on Friday. These are large indicators for the US, in addition to the fact that the earnings season out there kicks off this week. And the reason I'm focusing so much on the US is because what the US markets will do, the world will follow. So therefore, it's important. Remember, big US banks are kicking off the quarterly corporate season this Friday. JP Morgan, Wells Fargo, Citigroup, Morgan Stanley, all of them come out with numbers in line of the rising interest rate scenario out there. And therefore, what those banks do and say will have a bearing on the markets on next Monday as well. So it's a crazy week, you would have to say. Now, what are the markets? Dow dropped 600 points. Remember, Nasdaq closed about 3% lower as rates popped after the September jobs report, and the futures are down. The Dow futures are down as well. CBOE VIX would have spiked up. I would reckon dollar index would have gone up as well, 112.55. CBOE VIX up 2.75% at 31.36, so from 28 all the way to 31.5. The 10-year yield at 3.88. There is no place to hide. The Nifty, SGX Nifty will be indicating a start which is in the red, and a deep one at that, and there is no taking away from that. 275 odd points lower at circa 17 or 1000. So this should be anticipated. Now, therefore, what's the trade setup therefore for the day looking like? I mean, what experts suggested that the recent supports of 16,800 and 16,900 might get tested early on in the week. Do we respect those, or do we crumble under pressure is the key question. PCR is at 0.77, 0.85 for the Nifty and Nifty Bank, and that is actually neutral territory. So the good part is that usually if the options, like the way last week call shorts got taken out to the cleaners, right? Because the markets did rally a little bit in some point. So therefore, call shorts did get taken out to the cleaners. This time around, the PCR being what it is, would ensure that whichever way the market moves, there aren't too many very bearish or very bullish positions set up for the week. And therefore, we may not see that much of activity on the option side relative to what happened last week or week before last, which is actually a good thing. I mean, frankly, if you think of it, last week was not too bad. Nifty FMCG was the only sectoral index to decline over the last 5-day period, even if you account for Dashera. So last 5 days, Nifty FMCG is the only index. Everything else has done okay. Does this set the stage, therefore, for some downsides? Remains to be seen. Keep in mind, viewers, that there are two opposing forces at play as well. If you look at it from a data perspective, Brent crude is near $98. I mean, the biggest macro woe for India has come back with a bang. On the flip side, India direct tax collections are 52% of the target, and therefore that's a net positive. So there are positives and negatives at play, but the macro worry is certainly there. And earnings season kicks off. Today we'll have TCS. IT may not necessarily set the stage on fire on the positive side. So we have TCS today, and this week is important from India perspective because nearly 22% of the Nifty weightage comes out with numbers this week. So therefore, it's an important week from an earnings release perspective, from a global perspective, and from the fact that macros are not looking all that great. Maybe just bottom up remains to be seen. Now, what therefore should be watched out for? I thought cement was an interesting behavior pattern on Friday, except Ambuja, which was up 3% and OI went up. Everything else went down, and in some cases there was large short positions built up as well. I mean, look at Aramco, for example. So whether Ambuja cracks or whether cement withholds the selling pressure remains to be seen. But with the markets looking the way they are, very difficult to believe that there will be material outperformance from one or two stocks. Except, of course, there is some specific news to it. And in Ambuja's case, there is some news about how shareholders have approved that 20,000 crores of investment from Harmonia Trade, which is the Adani family office. But that notwithstanding, nothing too material to make the stock move too much, at least on the face of it. Some other stocks to watch. I think the stock of the day could well be Tata Motors for the wrong reasons. JLR saw sales decline about 4.9% YOY. JLR, Jaguar sales were down 9.9, Land Rover sales were about 3.6%. And I think I saw a fairly interesting comment. So JP Morgan, of course, has downgraded the stock. So that is one thing. And I saw a fairly interesting note fundamentally that India business is about 300 rupees, which is fine. JLR adds about 240, 250 rupees on a normalized scenario. Now, if that is not looking good, then can there be further pressure on the stock? Remains to be seen. I think JP Morgan, as I said, has downgraded the stock. Would be interesting to see what happens to Tata Motors today. I would suspect it will start off lower and maybe stay lower. Quarterly updates came in from ICICI Prudential, APE up 10.1%, NBP up 13.9%, nothing great. Star Health, cross-dark premium was up about 12%, but I think Citigroup today says that they might have a heightened claims ratio, which might impact Star Health. So watch out, keep that in mind. Kalyan Jewellers, revenue growth of about 20% looked okay. Jewelry sales largely should have been okay. Festive season a quarter coming up, but even the previous one had Ganesh Chaturthi and all of that. So therefore, maybe festive sales, bullion sales would have looked okay. This 20% growth doesn't seem to be too bad. Then SH Kelkar actually sounded a note of caution. They said that they registered steady demand sentiments, but profitability was moderately impacted due to higher input cost and adverse currency movements. So maybe SH Kelkar could be another a bit of a shock as well. Jeffries came in with a note on Bandhan Bank after their quarterly update. Amongst everything else, what stood out for me was the fact that the CASA growth was lower at 11%, making Bandhan dependent on wholesale deposits, which is never a good sign per se. But the good part is that the collection efficiency keeps on moving up for Bandhan. That's the big thing. The clarity on receipt from the government would be a key thing as per Jeffries and as per logic as well. But watch out for Bandhan. Maybe I was slightly iffy start today, that one too. A supply coming in for Aditya Birla, Sun Life AMC in particular, the lock-in period for the partial equity ended. The shares will be available for trading from today. I would reckon, therefore, that brings a lot of shares into the market. Maybe there could be a pressure on the stock. If there is, you know why that is the case. Gravita India, Abu Dhabi Investment Authority, or ADIA bought about 5.56 lakh shares. Well, last time ADIA put an investment into Gokaldas, that stock shot up. On a day like this, can Gravita do the same? Remains to be seen. ICICI Direct has a short call on Interglobe Aviation. Brent crude prices, again, the reason they are saying it's risen sharply from the lows. Stock has closed below the important support of 1800, which is a negative sign. There's aggressive call writing seen in ATM and near ATM strike, suggesting limited upsides. They expect the stock to remain under pressure and slide towards 1600 levels. Watch out for Interglobe Aviation. Crude being high. Naturally, all crude sensitives remain in focus. So aviation stocks will see pressure. ONGC, Oil India, etc. might see an uptick. So yeah, that should be okay. By the way, life insurance is in news for more reasons than just the ICICI Prudential update. The September numbers have come out. Nothing great to write home about. I don't think any of the stocks will witness some significant upside because of these numbers. OFSS, the news flow around that is very, very chalky. The stock has corrected quite a bit. Let's see if today there is more in store. There's some news flow which I couldn't verify. Therefore, I'm not talking about it. But watch out for OFSS. Maybe there could be activity. So you might want to do a little bit of search there. Sorry, I can't help you more with that. But Oracle Financial, you might want to do some searches there. Some news flow came over the weekend which died down as well. So we at BQ don't have that news flow. But some of the media outlets apparently reported. So watch out for OFSS as well. So viewers, that's the long and short of it today. Expect weak start. Crude sensitives on the upside might gain, on the downside will certainly lose. Tata Motors weak numbers might certainly have a chalky start, and some other quarterly updates, including SH Kelkar, including ICICI Prudential, might all have a slightly iffy starts today. So that's the bucket you want to watch out for. But more importantly, this week will be very, very choppy and volatile. Lots of data points globally, lots of data points locally in terms of earnings season. And Friday post market close will have large US banks reporting numbers, and Saturday we have a bunch of now companies reporting numbers in India, including HDFC Bank. Therefore, even the Monday following could be a fairly uncertain to predict the kind of Monday that we'll have as well. So the next 7 days filled with data points. You might want to play safe in the current week. Stay calm, more importantly. I'm not trying to pass any panic here. This market has this tendency of bouncing back when people least expect it. maybe this time around would be the same. Thanks so much for tuning in today.